Hey there, TRASTRA fans. Welcome to episode 107 of your beloved TRASTRA Newsreel. In this week's episode, we dive into the dramatic turns this past week from Bitcoin's sharp decline to around $61,000 per coin, losing over 12% of the market cap in just 2 days to the geopolitical tensions adding fuel to the financial fire. There's a lot to unpack, so we'll get to that in a minute. We'll explore how global events are tightly interwoven with market dynamics, discussing everything from the U.S. Central Bank's interest rate decisions to the recent developments at the Bitcoin Policy Summit in Washington, D.C. Also on our agenda is a look into serious regulatory actions like the Wells notice received by Uniswap and the FBI's latest subpoenas in the cryptocurrency community. I'll also cover Yuga Labs' surprising missteps with the FTX US account and what the closure of the Bored and Hungry restaurant in Hollywood means, Los Angeles rather, it's not Hollywood, it's Los Angeles, means for crypto in the physical business world. Spoiler alert, not much, but it's a fun story to report on, so make sure to watch to the end. So stay tuned, make sure to hit that subscribe button, and watch this full episode right now for an in-depth analysis of these exciting developments. Let's get started. On April 14th, the cryptocurrency market experienced significant turbulence, with Bitcoin's value dropping sharply to around $61,000 per coin, a decline of over 12% in just 2 days. Initially relatively stable above 70,000, the drop to a multi-week low was influenced by a mix of factors, including geopolitical tensions and financial market uncertainties. This downturn resulted in a loss of approximately $130 billion from Bitcoin's market cap, although Bitcoin later recovered slightly above 64,000. The market's volatility was exacerbated by escalating tensions between Iran and Israel following Iran's retaliation against Israel airstrikes earlier this month, that is. These geopolitical developments contributed to broader financial market losses, especially after U.S. central bank officials indicated that they would maintain current interest rates, causing investor nervousness. The convicted fraudster Arthur Hayes of BitMEX also highlighted the upcoming U.S. tax deadline as a potential stressor that might reduce dollar liquidity, further impacting cryptocurrency prices. Despite these challenges, there were signs of recovery after Iran signaled a temporary de-escalation, cautioning against further conflicts, which helped stabilize the market. As of this Monday morning, the time of recording, Bitcoin's trading at slightly over 65-ish. So maybe it's time to buy some Bitcoin in the run up back to 70, I don't know. Congressman McHenry advocated for U.S. leadership in Bitcoin at the Bitcoin Policy Summit in Washington, D.C. McHenry discussed Bitcoin's resilience against global efforts to suppress it, emphasizing the technology's freedom-enabling aspects. He criticized colleagues' lack of understanding about Bitcoin's transparency, contrasting it with traditional cash used in illicit finance. McHenry underscored the necessity for policymakers to be informed about Bitcoin, suggesting they read Satoshi Nakamoto's white paper to avoid misinformation. His speech highlighted the potential for the U.S. to lead in financial technology and innovation. Amen. The U.S. Treasury is pressing Congress for enhanced powers to combat terrorism financing via cryptocurrencies. Deputy Secretary Adewale Adeyemo, addressing the Senate Banking Committee, highlighted increased usage of digital currencies by hostile nations and terrorist groups like Iran's Quds Force, Hamas, and the Palestinian Islamic Jihad. These groups exploit cryptocurrencies to bypass conventional financial scrutiny. The Treasury seeks to implement secondary sanctions against foreign digital asset services that facilitate such illicit activities, following recent actions against Russia-linked entities evading sanctions through cryptocurrencies. Here's the news that's thundered through the cryptoverse like I don't know what. Uniswap has received a Wells notice from the SEC indicating potential enforcement action following an investigation. As a decentralized exchange, Uniswap facilitates trades via smart contracts rather than a centralized system and offers a governance token, Uni. The SEC's focus is likely on whether Uniswap functions as an exchange under the definition that requires coordination of multiple buyers and sellers. Legal opinions suggest that proving Uniswap meets this definition is, to say the least, contentious. The outcome could significantly impact Uniswap, possibly leading to fines or an injunction even, with legal commentators noting, though, that the case might extend over a year or so with little chance of settlement. I think it's wrong. The settlement's coming. I mean, Uniswap's got, about $50 billion in assets under management, so a few million fine is not going to do a whole lot for it. So the FBI subpoenaed attendees of the October 2022 CoreDev Atlanta event, following the theft of over 200 Bitcoins from developer Luke Tashir, worth about $14 million. The subpoenas demanded names, GitHub usernames, and emails to investigate the theft. The community naturally criticized the potential privacy invasion. Under legal advice, Mike Schmidt of the Bitcoin nonprofit Brink complied, but expressed concern over the extent and focus of the FBI's inquiry. Yuga Labs, creator of the Bored Ape Yacht Club NFTs, has unintentionally directed over $250,000 in royalties to a bankrupt FTX US account in the past 2 months. Arkham Intelligence revealed that these transfers occurred at a deposit address identified with FTX US, which ceased operations in November 2022 amid legal turmoil involving its founder, Sam Bankman-Fried. The payments, termed creator payouts, are part of a larger industry practice where NFT sales proceeds are returned back to creators. The mishap raises questions about Yuga Labs' oversight and its potential impact on the financial claims in the FTX's ongoing bankruptcy proceedings. And finally, the Los Angeles-based Bored and Hungry restaurant inspired by NFTs closed after 2 years. Co-founder Andy Nguyen has redirected the brand's future towards international expansion in Asia and the Middle East through the Hungry DAO, which now owns the branding rights. The original Long Beach site might see a revival, but plans are kind of tentative right now. Initially, Bored and Hungry distinguished itself by accepting cryptocurrencies like Ethereum and ApeCoin, capitalizing on the popularity of the Bored Ape Yacht Club NFTs. The restaurant also showcased how digital assets could integrate into physical business models. Well, clearly not this business model. It didn't really integrate too well, so after 2 years, it closed down. I'm sure that cryptocurrency acceptance was not the only reason for that closure, but there we have it. So this is it for now. Thank you so much for watching episode 107. Make sure to follow us on social media, subscribe to our YouTube, and join our Telegram community if you haven't already. We've got some sizzling discussions going on up there. And in the meantime, again, thanks for watching, and I will see you in the next video. Peace.